watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand everything you need to know about the trade in the markets today. Remember, yesterday was a bad day. We did see a sharp sell-off in the markets all across the board. With the benchmark index Nifty that tested the 23,000 mark for the first time since June of 2024. The index witnessed heavy sell-off, 7 lakh crore rupees wiped off from investors. Kitty right there. In fact, the Nifty is now 13% down from its all-time highs of 26,077 as well. The broader markets also came under pressure. 2% of a fall for both the mid caps and the small caps is what we saw. All the sectors declined yesterday, with sharp sell-off being seen on outperformers of the past, like, of 2024. The realty index dropped by 4% odd as well. There's been a continuous sell-off that we're seeing. Even on the earnings front, we've seen sharp whipping on stocks like Zomato, on MCX, Oberoi Realty, Dixon Technologies. Most of the earnings have actually not come in that bad, but when we saw the kind of fall that these stocks incurred, 10 to 15% kind of a decline came in. So what does all of this really point out to is something that we're going to be understanding today. Of course, today there is a positive opening, as was being indicated by the GIFT Nifty, 23,111 on the Nifty right now, taking positive cues from the Wall Street as well as the Asian markets. And as per the GIFT Nifty trends, let's actually find out how the markets are going to be shaping up today. Let's welcome our guest on board. We have Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services, now joining in. Warm welcome to you, Gaurang, and great to have you with us. Well, the markets are definitely not in a great shape right now. We've had this one big event at least go out of the way with not many negative surprises, thanks for that. But still, there is a lot of weakness that is persisting in the markets. How are you making sense of the current scenario? What is really worrying the markets as of now, Gaurang?
Thank you, Sakshi, so much, and morning to all of you. Uh, one thing reassuring for me, if I have to take one positive thing out of what has happened over the last 2 days in the market, my sense is that possibly there will be midnight oil that is going to be burned by the Ministry of Finance, the finance minister, to do whatever possible in this budget that is coming up on 1st of February. After whatever, swearing in ceremony, signing of 200 executive orders, making statements that has sent shivers down the global financial markets. And, if the day one and day two is going to be what we have seen, Sakshi, to be very honest, I don't know what rest of the years lies ahead of us till the time we see the next presidential election in the United States of America. And during that time, God only help us what is going to happen with the statements that has been put forward by the 47th President of United States of America. Now, one can only hope and pray that these are only words, these are no actions, but the fact that he signed 200 executive orders and that there is more, news flows to look to, how much of it is positive, how much of it is negative is only one can tell. But let me say this. I think our earnings have been very, very good for the third quarter compared to the second quarter. And one can take a positive leaf out of this and say that fourth quarter next financial could be better. And like I mentioned, I think after what has been mentioned by the President of US, Mr. Trump, uh, governments across the globe will want to do something more for their economy and for their country. And I think India more so, because I think it is over time that the government starts doing something very, very positive for kickstarting the economic consumption and making India a global manufacturing hub and pushing for consumption. I think these are great times to nibble into some fundamentally sound stocks. 23,000, 23,100. I only hope that we don't breach that 23,000 mark, because if we do that, then I think the downside is a little bit more wider than what is anticipated. So let's hope we are able to maintain this 23,000 spot Nifty mark and able to pull ourselves from where we have closed yesterday. And there will be a little bit of more choppiness and volatility till the time we see the budget, we read the budget, and more importantly, Sakshi, reading in between the lines. That is more important.
Right. So, Gaurang, do you think that keeping in mind that the next biggest trigger will be the budget for the Indian markets and a lot rests on what the document really holds as promise, do you think it's now important for investors to look at those key themes that we always come up with during the budget that find their mention in the budget speech as well? Are those the places that investors should look at? Or is it completely a valuation driven game right now? You should look at stocks based on valuations. How are you selecting the key stock opportunities right now?
So, Sakshi, let me say this. I think budget is going to come across every year. Okay. Uh, Government is going to do whatever they can best for in the interest of the country, in the interest of a common man, and more importantly, keeping a very positive stance as far as the agri-related policies are concerned, because we are basically a agrarian economy, as we call it, because large part of our population depends upon agriculture, and rightly so. Uh, so our sense this time, if you ask me, normally I don't really look forward to themes in the budget, but given the backdrop of events, especially over the last 2 days, and what Mr. President Trump has spoken about, my sense is that defense, infrastructure, power, uh, real estate, that is affordable housing theme, and something to do with the common man in terms of personal stack structure that we have. I think that needs to be, and of course, manufacturing, there is a lot of news to make Indian companies more competitive. But my first four priority themes would be defense, power, infrastructure, and definitely real estate sector, given the kind of uh, and of course, defense, power, infrastructure, and possibly, like I mentioned, real estate. I think these are the four basic themes. Of course, two, three more sectors would definitely be the highlight, but these would be the core ones.
Okay, four key sectors that investors keep an eye out on: defense, power, infra, and real estate for opportunities right there. We can continue to discuss on these themes as well. But let me come to the earnings point, which you mentioned also, Gaurang. You believe that large part of the earnings that have come thus far are actually better and have, pointed out to a positive move. Something that was being feared has not actually come in. How are you really, let's divide that into the key segments that have actually reported their numbers. IT space first. How have you understood and analyzed the kind of IT numbers that have come in thus far? We have all the big four companies reporting their earnings already. Some of those mid caps have also started to come in with their earnings as well. What stood out for you? Do you think finally the demand scenario is improving right there, or do you think a lot is still at stake? Just like how you pointed out, we will have to see what news flow comes in after Donald Trump has assumed office, especially on the visas factor. Will that be still an overhang for the IT sector?
That is going to be an overhang, Sakshi, because that part of the geography has a sizable amount of exposure for Indian IT companies, and contribution is also at an elevated level on the balance sheet. But if Wipro can deliver what Wipro delivered, to be very honest, because Wipro is one of the weakest link in the large cap IT universe, even when you compare with mid cap to Wipro, Wipro has been an underperformer. So if Wipro can do what it has done, I think there are some really interesting good times ahead of us in terms of fourth quarter and the next financial year, and maybe many more financial years to come by. Sakshi, I've been speaking to you. I've been speaking to our good friend Shell Bhatnagar on IT front for a pretty long period of time. We've been maintaining a positive stance, and we continue to maintain our positive stance. There may be misses here and there, Sakshi. I'm not saying that all four quarters should deliver 12, 15% plus kind of run rate and YOY run rate of 20% plus. I think that's a little bit more to accept. Difficult times are there for each and every sector and company, but we have to see how capable the management is to pull themselves out of that difficult times and get back into the growth trajectory. And I think most of the IT companies that we cover in our IT universe, all those companies are very, very strong on the fundamental side.
Mm. We'll also bring in Tata Tech here, specialized auto-focused IT services company that came out with the earnings yesterday. Of course, this stock has been a big disappointment for all these investors who got their allotment in the IPO and thereafter got an early chance to take an entry into Tata Tech once it got listed. But the stock has disappointed after that for months and months in a row. Quarterly earnings also continue to be subdued. What's your own sense, sir, here?
So the floor for Tata Tech was, I think, 600. Correct me if I'm wrong, as far as the IPO is concerned, actually, or maybe a little bit above that, whatever be. And the day of listing, it went to 1400. Correct me if I'm wrong again. And from there, it has come down to 800. So if you actually look at the investors for in the IPO, they are still in profit. So I don't think they have to complain about it. And they got an opportunity at 1200, 1400, or even at 1000 rupees. You would have made a very decent set of return. But nevertheless, not no point in crying over spilled milk or past history. We had maintained subscribed from a long-term point of view on Tata Technologies, and we continue to believe that this company will definitely find its lost glory, and earnings should definitely have a positive impact. So, keeping that IPO note as a base of my comments, if you have invested from a long-term point of view, continue to hold on.
Okay, invested for long term, you can continue to hold on as well. We're getting one question from one of our viewers, Gaurang, for you. So before we look at the market opening, I think we can address this. This is on the FII sell-off. He says that Gaurang sir has, maintained that he does not really bother about heavy FII sell-off. So I want to understand from him that markets have been consistently falling with this heavy FII sell-off. What should retail investors really understand from that as the impact of FIIs on the Indian market sell-off right now?
So my simple advice to this good friend of ours is, Sakshi, that don't look at the glass as half empty. Look at the glass as half full, because you're looking at only one side. FIs have been selling, but domestic institutions have been matching, almost matching, Sakshi, on the buy side. Maybe they might have missed the mark by maybe 5, 10,000 crores. Had it not been for the domestic buying, I think we would have been down and out maybe 30, 35% on Sensex Nifty. It is only because of this domestic buying and support from the domestic institutional investors, thanks to the retail investors' maturity of understanding what continuation means investing in stock market or via mutual fund SIP if you are not able to understand the stock market and not able to give time. So my simple thing is, even if you look at the numbers right from October, I'm not talking about look at last 1 month or last 1 week or Jan 1st till date. I'll say look at the total number from October 1st till date. I think it would be in excess of more than 1,50,000 crores. Maybe it will be much more than that, or maybe near about that. I'm talking about the sell side figure, where the domestic guys have been buying almost one crore 35 lakhs, 1 crore 40 lakhs, or maybe 1 crore 45 lakhs, whatever. So, well, in effect, what I'm trying to say is that FIs will do what they have to do. We have to do what we have to do. And we have enough maturity, understanding, and intelligence to understand what our country is doing and what our corporates are doing and what our government is doing. We don't need borrowed gray cells in form of FIs to tell us what we are doing. And they are nobody's relative, Sakshi. They will sell
Yeah.
and go, and they'll buy China, they'll sell Taiwan, they'll sell China, buy Taiwan, they'll sell Taiwan, they'll buy Malaysia. I mean, why do we have to ape them? I think we have got our own maturity and intelligence to decide what we have to do.
Absolutely. Hope this has answered your question right there. Our viewer Gopal has been writing in this question. So thanks for that as well. We'll slowly and gradually move into the market opening. But quickly before that, Gaurang, EMS space is something that I wanted to discuss. What's your view on that, especially after this sharp fall that we've seen on Dixon Tech? I mean, this has been one of the spaces which has been an outperformer, one of the favorite spaces. It's performed very well. What would you really say on Dixon, Keynes, PG Electroplast, this entire space right now?
Keynes Technology is also one of them, Sakshi.
Yeah.
Though this is not a recommendation, let me be very, very clear, because we don't have coverage on PG Electro, Keynes, or Dixon. I think most of these stocks have done its bit in terms of the upside, especially Dixon. I mean, humongous run up. You look at the last 6 months, last 1 year return, or last 1.5 year return. I mean, your eyes are going to have stars in it. Looking at the kind of return that Dixon has given. I'm also of that opinion, Sakshi. Though I forgot to mention the EMS sector while I was mentioning about budget expectation and sectoral focus. Uh, this is one of the most important sectors for the government because we have to bring down our dependency and reliance as far as our imports for electronic components and equipment are concerned. And my sense is that maybe give the policy a little bit of more time to come out in terms of budget as to what government is planned for the EMS sector, and then take call. The reason why I'm saying this is, what happened to Vodafone Idea yesterday. You know
Yeah.
what happened to Vodafone Idea day before yesterday.
Yes.
Everybody jumped onto the bandwagon as if it is announced, and Vodafone has almost cleared 50% of his debt on the balance sheet. And then what
Yes.
happened yesterday? So just hold on your horses. Don't try to jump the gun and be preemptive. Don't be the government. Let the government do what it has to.
Absolutely. And markets have opened, so let's quickly look at how they are opening at this point in time. When we're looking at 23,100 on the Nifty, and the Sensex is opening about 0.4% higher as well. You're also looking at the Nifty Bank in the positive zone, 48,602 right now, flattish with the positive bias for the Nifty Bank as well at this point in time. With the advances are 969 on the NSE versus declines of 528 at this point in time. Which are the top movers on the Nifty? Well, you have Maruti, L&T, BPCL, you have HDFC Live. These are the kind of stocks that are doing well. Broader markets are still slipping about 0.1 or 1/10% lower. Sun Pharma is higher by 1.5%. Shriram Finance is another one that's also on the move. Dr. Reddy's among the top movers. Pharma, FMCG, healthcare, IT, auto space. These are the pockets that are hovering higher, whereas PSU banks and the Nifty FinServ, you also have the oil and gas sector that has actually slipped right in the morning trade. Broader markets definitely taking a deeper cut, about 0.6% of a fall for the small caps right now. The consumption names are absolutely flat at this point in time. Auto names, some of them are higher. Maruti, Bajaj Auto, HUL, remember the numbers come in today, 0.5% higher. ITC also 0.5% up in trade. That's the kind of move that we are seeing. But the top Nifty losers are Adani Enterprises, Tata Motors. These kind of stocks are actually declining. Metal counters and commodity space counters, some of them are also declining in trade as of now. Which are the other counters that are on the move? JSW Steel is hovering higher in trade right now from the metals pack, although we have results impacts coming in now. Dalmia Bharat about 0.5% lower, 1760. Science DLM about 10% lower after those earnings have come in. Let's look at even Zomato and Swiggy. What's the shape there? Swiggy is down about 2.5%, and Zomato is also 2-3% down in trade. India Mart after the earnings is again sharply lower by 9%. But Jana Small Finance Bank, that's the one that's hovering higher by almost 8% in the earnings reaction. That's a positive one that you're looking at. ICICI Pru, however, is declining about 6.5% lower in trade after those earnings have come in. Capex plan announcement for Newland Labs, 2% higher. That's the one that's also on the move right there. Those are some of the stocks that are on the move right there. But Zomato now slipping further, 205 right now, 4% lower. This is the space. Let's discuss with Gaurang right there. Gaurang, Zomato third day in a row after those earnings came in, and it's been on a downward hill. Now about to test that 200 mark as well. Just a few weeks ago, this used to be the stock that all the analysts would continue to bet big on, despite it slipping, from its highs quite a bit. But just about 2 or 3 days, and it's lost severe ground. Concerns about competitive intensity in the quick commerce space, concerns about the quick commerce business, Blinkit continuing to make losses, front loading a lot of expenses with more stores opening for Blinkit, 2,000 odd stores. How are you really looking at Zomato as of now? Would you see this as a great opportunity for long-term investors to buy, or would you see some more dips in the upcoming days for Zomato because of competitive intensity and all of these concerns emerging?
Over the last maybe about 2 days, since the time the numbers were out, one has to understand that the large part of the investment of opening up 2000 dark stores, which was uh, the timeline was 20 December 2026, 2026, I beg your pardon, has been pushed forward to December 2025. Revenues, if you look at it, then there was in line or a little bit better. Bottom line, because of the investment that they are doing and front loading it rather than pushing it back, and they are
Hmm.
going in all out, lock, stock, and barrel. So it is the effect of this particular move in terms of the OPEX that they are doing and anticipating because of the competition. If they don't do it now, then later on there will be a large market share that they will lose out onto. And we also know that Zapto is planning to come out with an IPO this year. They have already got their funds or funding in place and they are working on it. So we maintain our positive stance. Our target is 280. Still, we maintain that. And I'm quite sure in the fourth quarter, you will have a very pleasant numbers to look at rather than what the market understands now. It is more of a knee-jerk reaction and, hearsay kind of a reaction. I think somewhere close to 200 and 200, 210 or in between that, between 200 to 210. If you've gotten at higher levels, average it in a phased out manner. If you want to make a fresh investment, don't go all out. Start at current levels and possibly buy on dips. Your question whether it can go down, who's to say that, Sakshi, to be very honest? I mean, tomorrow if something more comes out of the US and if you hear a little bit of more of, dumb tantrums, then not only our market, global markets are going to react accordingly. So
Hmm.
there may be downside, but I think from 300 levels to 210 or 200, there, wherever it has seen the bottom this morning, I think it's a sizable opportunity to look at investment from a long-term point of view. And mind you, term tantrums are going to stay here, and we'll have to possibly don't we don't have to complain, but we have to bear it and understand it.
Hmm. But just I'll dig a little more deeper when it comes to the optimism that you still have in the long term for Zomato. Even in the management commentary, they're talking about this competitive intensity even before the competition has come in. We do know that Zepto may be coming in. That's internal, but we're also hearing that how Amazon and Flipkart could be coming in into this same space as well. They are gearing up for the same. We have discussed in the part what DMart could also be really looking at. Right now, it's still falling behind in the quick commerce race, but it could actually come in. Now, these are players with much deeper pockets right there. Uh, what continues to be your pick for optimism on Zomato, even if such scenarios were to emerge? Because so far, what our limited understanding was that probably it's going to be a duopoly or a triopoly kind of a race, but seems not so, because more and more players are actually looking at this as a great opportunity, and this could only grow in the kind of numbers that could be in terms of players. How would you really look at it that way, sir?
So competition is always healthy, Sakshi. That's what I believed in. And my sense is that Zomato and Swiggy being the two, uh, established companies and have a history, and they have got a sizable amount of market share. They've got a good subscriber base. Uh, this is what I was telling. When the management understands the importance of the new competition coming in, they will look at possibly opportunities to not only deepen their claws into the areas where they are to firmly hold the ground, but also venture into the newer geographies like tier 2, tier 3, tier 4 cities, semi-urban, rural India, where they don't have penetration. So, and semi-urban and rural India, Sakshi, is a huge, huge, huge market. They need to prepare themselves for it. And how do they prepare themselves for it? Is to preempt the kind of competition that's going to come in. How how successful or how good that competition will stand out to be in front of them, that only time can tell. I'm no one to possibly gaze into the crystal ball and say what the future lies. I think we'll have to possibly see it as it comes to us. But we still maintain that given the presence that they already have, given the dominance that they have already have, given the experience that they've already had, newer players will come in Zaptos of the world and the Amazons of the world, and who knows what will come in other new form of competition. But we believe that they have been here, they have seen that, they have done that. And we understand that the balance sheet and the management is quite competitive enough to withstand any kind of peer pressure or competition, as of now, of course.
Hmm. Fair point, right there, Gorang, and we'll hope that this continues to be the case right there. Let's shift focus and shift gears as well to look at some of the other pockets in the markets as well, Gorang. Mid and small caps is something that I wanted to understand from you. Of course, these are the pockets. Whenever the market, comes under pressure, there is on a day-to-day basis, we are seeing sharper falls. These are the pockets that are actually the ones that get beaten the most. Of course, this has been the space where we have discussed in the past a lot of frothy valuations under question. How are you approaching these spaces right now? Are there pockets that still hold some value, or is this a no go area?
You need to be very, very selective, Sakshi, when it comes to micro cap, small cap. Mid cap, I would say that you can still be a little bit more adventurous, but look at themes and sectors. Like, for example, we were discussing IT at the beginning of the show. So,
Yeah.
IT, mid cap IT looks quite well. I did mention about mid cap IT when I was doing the comparison of Wipro numbers. You have mid cap names in banking, which look quite attractive. You have mid cap names in the pharma, which look attractive. You have mid cap names in the power universe, whether it is power generation, power transmission, distribution, or power equipment. You have
Yeah.
names in defense, which look very, very attractive. So
Hmm.
look at themes and sectors. Don't put your, close your eyes and put your finger on a particular company and decide that that will make fortune for you. I think that will be a blind man's guess and it will be a disaster.
Right. Let's discuss the banking space, sir. We were pleasantly surprised with Kotak Mahindra Bank's earnings a little while
Hmm.
ago. Today, there'll be the big bank numbers of HDFC Bank that will be coming in. Again, that will be important to track as to how the markets react to tomorrow. What's the sense that you're getting here, sir, on HDFC Bank versus the large cap private banks that have come up with the earnings thus far?
So I
And
remember
how
discussing,
does this shape up your future trajectory?
yeah, so
Yeah.
I remember discussing Kotak Bank with you and our good friend Shell, second
Yes.
quarter numbers. I think Shell also brought
Yeah.
up the exposure to MFI segment. There was a concern, and I'll
Yeah.
also like to add Kotak Mahindra Bank along with that IndusInd Bank because these two banks were a disaster for the second
Yes.
quarter.
Yes.
Fast forward 3 months forward, and you see the numbers for second quarter and Kotak Mahindra Bank. Surprise, surprise, 10% almost run up. This is what I'm trying to maintain. This is what I said that any sector, any company can have difficult times in a particular quarter or maybe for 2 quarters. But we have to look at the capability of the company and the experience of the management in terms of bailing themselves out or pulling themselves out from that particular difficult situation. And of course, reflecting upon the earnings which are going to come by. So we maintain a positive stance on Kotak Bank. We maintain a positive stance on IndusInd Bank. And one more feather in the hat. Uh, of course, negative was what we have been hearing in terms of news flow from US, from President Trump, and the improvement in earnings. Now, for look at Wipro, look at second quarter, look at third quarter, look at Kotak Bank, look at second quarter, third quarter, look at IndusInd Bank, look at second quarter, third quarter. What I'm trying to say over here, Sakshi, is that there is visible amount of improvement. And if it can turn around in 3 months, when you compare second quarter and third quarter of some particular companies which are weak in second quarter, then you can possibly have a little bit of more futuristic view in terms of fourth quarter earnings in the next financial year, beginning 1st April 25. So let's hope that we have possibly seen the worst. External shocks will be something that we'll have to react to and do repairable measures as and when those news flows come. But domestically, I'm quite optimistic of what we've seen that earnings are turning around and budget should be one that will be full of reforms with fiscal discipline, growth oriented, consumption oriented, and employment oriented.
Hmm. Okay. Another big number that will come in today is HUL again. And FMCG, we have discussed so many times in the past. It's been a pain point again, of the past where investors have really not made any money. How are things going to be looking like for HUL in this past year, 2024 latter half? We did see the stock inching high, climbing into record levels again, slowly and gradually. Are things going to improve for this entire space, and what is your expectation on it, sir?
So Sakshi, here again, I think whatever little bit we have seen of some FMCG numbers for third quarter, there have not been much, but the business update for the third quarter. Uh, well, second quarter, because of the erratic rainfall and so forth, we had difficult times. Consumption from semi-urban rural was a little bit at a lower level. Even metros did not contribute the way most of the FMCG management companies anticipated them to do that. But this third quarter, I think we have a better story to tell in terms of FMCG sector earnings for the third quarter. And I think if the government does what it has to do in terms of pushing consumption and doing a little bit more for a common person in terms of restructuring the personal tax slabs and giving a little bit of more liquidity in the Aam Aadmi pockets, then
Yeah.
my sense is that FMCG is likely to do much better. So let's wait and see. And I think it is high time for government to push consumption also. Look, we are a country of 140 crore plus counting population.
Hmm.
Why don't we give the benefit of consumption that happens in our country to our own country? We all
Correct.
know, actually, in the last 1 year, I have been traveling and I've been seeing some huge niche and marquee names at international level setting
Okay.
up their shop in India, and they are no, affordable goods. They are way beyond luxury. And if
Hmm.
people are able to pay that kind of price, then why are we getting that benefit to, foreign entities? Why don't we give it to our own companies established out of our own base?
Hmm. Hmm. Right. Gaurang, before I let you go, there are a lot of questions that are coming in from our viewers who are facing this kind of a correction in the market, this kind of a volatility for the first time, and they're just unable to understand as to how to handle it. Now, many of them have actually seen some of the stocks in their portfolio give them 20, 30, 40% returns in an absolutely shortest time frame. For them to see such kind of fall for 4.5 months and not being able to see that the markets bounce back just the next day or just the next week and probably climb to higher levels, that's not happening anymore. Something that was the entire case in 2024 is some very, very different. What are you going to be advising them with so that they don't burn their fingers in this kind of a volatility?
Well, I will only tell them that, before they came into the market, I think most of these investors would be post 2020 pandemic, thanks to
Yes.
China, what happened to us and the rest of the world. I would only tell them that spin back, go towards, don't, I mean, go look at the history. Uh, 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 Notebandi was a big event and the market corrected. Implementation of GST was a big event, market corrected. 2014 crude oil crisis, market corrected. 2008 Lehman Brothers crisis, market corrected. I don't want to go into a longish history, but Ketan Parekh, Harshad Mehta,
Yeah.
markets are exposed to. So I'll just say this, Sakshi, for the benefit of our viewers, that look, markets are exposed to all kinds of risk. Okay, if you don't have the risk appetite, please introspect as to what you want to do. Whether you want to come to the stock market or whether you want to park your funds in bank FDs and PPFs, where you have a low risk and a low return kind of situation. But if you're willing to come to the stock market, please be clear about one thing. Markets will throw 10, 15, 20, 25% correction at any given point of time, depending upon the local and global events. You have to be prepared and you have to be strong enough to withstand those kind of internal and external shocks that the market will throw at you. If you
Hmm.
don't have that kind of capability cap and appetite, please introspect. It's my humble request. Now, point number one. Point number two, if you don't understand FNO, futures and options, puts and calls,
Yeah.
for the love of God, don't go over there. Point number three, don't listen to the Mahagyanis who come on the unsolicited international universities of the WhatsApp and the Googles and the YouTubes of the world. Point number four, look at quality. Don't buy quantity. Buy few shares of strong companies. Don't go and buy, like I said, don't be a blind man and put your finger at any company and buy that stock. It will possibly put you in a very difficult situation. And most importantly, point number five, give time to the market. Don't try to time the market.
Wonderful. Well, thank you so much, Gaurang, for spelling out very clearly things which are supposed to be done, opposed to things which are absolutely not supposed to be done in this absolutely volatile market. For all those investors who are still grappling with as to how to deal with this uncertainty, volatility, and the sharp dips that you're seeing in the markets, this could be the way. As Gaurang has said, there could be many more uncertainties that could come in. Markets could dip even lower from the current levels. So be sure to save up some of your appetite for later. Have a long-term vision, believe in the market's long-term story, and you will be in the right wing. Well, thank you so much, Gaurang, for being with us on the show. It's always a pleasure to listen to you and to wonderful insights that you always share with our viewers. Hope you have a fantastic time till the time we meet you next, and hope we don't lose too much of a ground till that time. Thank you so much for being with us.
You take care, Sakshi. Thank you very much for having me on the show. Well, prepare for the worst and hope for the best.
Yes, that's the way we should be. Yes, absolutely. But hoping that things actually turn better. All right, viewers, time now to actually shift gears and focus on the earnings factor. Tata Technologies came out with the earnings, and we have with us a very special person joining in on the show with us. Mr. Warren Harris, the MD and the CEO of Tata Tech, is now with us on the show. Warm welcome to you, Warren, and good to have you with us on the show as well. Before I start off with the earnings key fine print and ask you what went into this quarter, what is the vision going out, I want to understand from you this big event that has just gone by, the swearing in ceremony of Donald Trump in the United States. All of us were glued to the screens. All of us were looking at any signs that would give us whether to look at things turning in the positive way, especially for the sector that you are linked to, the IT sector. That's the one that everybody really looks at, whether things will be positive, announcements will be positive. How are you really looking at the scenario unfold for the Indian IT sector at large under Donald Trump 2.0 regime? Is it going to be far different from Donald Trump 1.0? Are things going to be better? Are you better prepared for things here? How are you looking at it?
Well, I think we're all trying to work out what's going to happen, but I'm encouraged that we finally have clarity in terms of who's going to be in the White House. I think the last 12 months, given the policy positions, the extreme policy positions of both sides, I think it's been difficult for many of our customers to make decisions, given the differences that could likely manifest themselves. So I think the good news is that there's administration clarity now, and I think it's clear that many of the components of the Inflation Reduction Act are going to be revisited, and what that's likely to prompt for the automotive industry is a much more balanced commitment to not just EVs but plug-in hybrids and optimizing legacy internal combustion engines, and that's a good thing for Tata Technologies because we've got capabilities, breadth and depth of capabilities in all of those propulsion options, and as long as our customers are investing, then we can intersect with that. I think on the technology side of things, there was an AI infrastructure announcement that Larry Ellison and a number of others were at the White House to confirm yesterday after the inauguration, and I think that's signaling that the administration is very much going to be pro-tech and pro an investment in technology to ensure the United States continues to take a leadership position in technology areas that are critical to the country. And again, I think that's good for organizations like Tata Technologies that can contribute towards the investments and the IP that's going to be built.
Wonderful. Let's come to the earnings fine print now. Warren, do take us through some of the key highlights there. We've seen some softness on the bottom line for you, just about a small 1% drop. Do tell us, is this, okay? Have you been anticipating this drop? Is it only limited to this quarter? Are things going to shape up better going forward from here? How are you looking at the entire demand scenario right now?
Well, we were quite pleased with the earnings that we presented yesterday. Q3 is traditionally a relatively soft quarter with festivals and holidays. And we also rolled out our salary increments in October, which represented a 150 basis point impact. We've been able to recover most of that, and in the face of the uncertainty in and around the policy position in the United States and Europe, we've still squeezed out, in constant currency terms, a 1.7% sequential growth. And so we're pleased with the resilience that we've demonstrated, and we think it represents a good platform for us to take advantage of the clarity that we're expecting in the markets that we serve in calendar year 2025.
Okay. I want to just follow this up with understanding as to whether the wage hike impact is done and dusted with Q3. Will there be some more impact that we see on the margins in the next quarter as well? How's the scenario going to shape up?
No, the full impact was taken in Q3. Okay. We do not believe there's any residual issues that will inform what we do in Q4 and beyond. And again, the fact that margins were only marginally impacted, I think, is a testament to the discipline and the rigor that we've interjected into the business, and I think it demonstrates the full control that we've got of the operations. I think one of the things that also informed EBIT and profit before tax and after tax is the contribution from the joint venture with BMW. We began operations in November. And we were able to take a contribution from that operations at the end of December, and we certainly believe that contribution will continue to increase in the coming quarters and years. So, we're delighted about the partnership. We're excited about the things that the joint venture will deliver to BMW, but we're also excited about the impact that that's likely to have on earnings.
Okay, by when do we see meaningful contribution to the top line coming in from this JV?
Well, we've taken an equity approach to booking the contribution from BMW. So there's no top line impact, but it will be it will improve and will be accretive at an EBIT, a PBT, and a PAT level.
Okay. How about your partnership with Air India, the order win there, as well as with VinFast? Could you also share as to how are things progressing on those two important deals?
Well, I think, one of the things that we were able to celebrate yesterday was in Q3, our aerospace business grew sequentially by 37%. So it was a real breakout quarter for Tata Technologies. And that was not just on the back of the work we're doing with Air India, but also on the back of the work that we're doing with Airbus. And we also celebrated in Q2 a sizable win with an aircraft seat manufacturer in Europe. So our aerospace business is really now picking up momentum. We've been investing for some 2 to 3 years, and I think the return that we anticipated is really now starting to inform our results. And we're not only excited about the continued momentum in Q4, we really think that next year is going to be an outstanding year for us in the aerospace division. The aerospace sector cannot produce enough aircraft today to satisfy the exponential increase in demand that we've seen after the pandemic. And so organizations like ourselves are not only contributing towards improvement in product, we're also helping with the deployment of digital solutions to accelerate manufacturing throughput for not just the OEMs, but also their associated supply chain.
Okay. Do tell us, how is the deal pipeline looking for you from here onwards, going forward from here? the key clients that you added in the current quarter, and of course, what does the rest of the year looks like for you?
Yeah, well, again, we were relatively pleased that that in terms of signings, we celebrated 4 large deals in Q3, and again, that was in the face of relatively uncertain economic times, because most of those deals were initiated earlier in the year. So to get them over the line was gratifying, and I think it really gives us some confidence that what we've been struggling with in the last 12 months is nearing some form of completion. So we won a deal with a premium automotive OEM to do test and validation of a battery electric vehicle that they're launching. We've stood up an offshore development center for a tier 1 automotive company, and we've also done an embedded deal with an automotive technology company. So, these deals, both in terms of content and in terms of size, certainly inform our confidence in terms of growth and momentum going forward.
Okay. Lastly, would you share with us any update that we can expect as far as your top line growth and your margin outlook is concerned for FY25, as well as what's your outlook for FY26 as well?
Well, we're working hard to ensure that Q4 is better than Q3. And so we are cautiously optimistic in terms of our year end, but we're very bullish about FY26. I think the clarity in terms of policy positions, not just in the United States but also in Europe, will ensure that many of our customers that have essentially been sitting on their hands and waiting, we expect them to start to make decisions, and we think that will really enable the entire sector, and specifically Tata Technologies, to have a very good year in FY26.
All right, got that. Mr. Harris, thank you so much for being with us then on this special discussion. I wish you all the best for the upcoming quarters as well, and hoping, like you said, things will improve in Q4 versus Q3, and then in FY26 we're going to be in for better times right ahead for the company and for the industry as well. All the best to you, and thank you so much for being with us.
Thank you very much. Thank you.
All right, viewers, we'll get back to the markets now and quickly look at how we wind up the morning edition. As far as the Nifty is concerned, 23,062. It's again been very, very choppy in the first half an hour, so to speak, of the morning trade. But we'll see how it really pans out. It's been, every day has been very, very different thus far. And we're bang in the middle of the week. We'll see how things progress. Already, if you see, the Nifty bank has slipped into the red, 48,544. So there is some pressure building up, but again, it's an important day. HDFC Bank, HUL numbers coming in, and those will be important triggers for tomorrow as well. And we'll see how some of the numbers come through the day as well. We'll wrap it up at that on this edition of Market Today. But stay glued to Business Today television. We are going to be getting you massive exclusives from the world of, the World Economic Forum at Davos. So we are speaking to the top political names, top economic names, business, India Inc. names, and they're going to be sharing as to what does the future really look like in this current economic environment as well. So stay glued in for all of those updates that are coming in soon on your screens on Business Today.
Hello and welcome to Business Today. I'm Siddharth Zarabi, live from the Business Today India Today studio here at Davos, the World Economic Forum of 2025, and we begin our live coverage on Business Today with a very special guest, Kathy Lee, the head of